I think we should really get into that with the COMEX because
Yeah.
I think I mean, look, I know that there's a lot of conjecture out there, but the cooling system excuse, and
Right.
I've heard and read a lot of things. I mean, H4, there are backups upon backups
Yeah.
that people that in the industry said that it's impossible that this should ever
Well,
happen.
not only that, you have end of month, you have massive short positions, you have massive lack of liquidity because there's not enough bars.
Yeah.
It's like the LBMA going from T+1 to T+8 weeks, one being a day, and then 8 weeks because of a shortage of manpower and trucks. We knew that was Fugazi. This is Fugazi too. And look at it. You're
I
talking.
have to interrupt you.
I know you like it. I know you.
No, I love,
Yeah,
I
no,
love that you got the Fugazi thing.
other than the vest, I've taken a lot of your bad habits.
Those are good habits. Fugazi.
Andy Schectman examines a suspicious COMEX outage during a critical delivery period, questioning the official cooling system explanation. He explores investor psychology, price projections, and mounting physical delivery pressures threatening the paper-silver market. Schectman highlights growing institutional support for precious metals, while exposing eroding market trust and delivery manipulation risks, concluding that silver has entered a new phase where decades of suppression are ending and true price discovery is finally beginning. Thanks for watching. Subscribe to Find Metals for more updates.
Or overbought and had gone straight up, in a vertical line and needed a bit of a correction. But look at what happened and how, we were getting how many phone calls, like people wanting to slit their wrists. Is it over? Of course, I bought it too high. The run is over. You're never going to get back. And then here we are.
Andy's a shill.
Yeah. But what did that do? That was a big speed bump that threw everyone off. And that's the way markets behave. And if you don't understand that, you're not in the right market, period.
Yeah. And by the way, those are the times, and I think we said that on one of the podcasts where we said those are the times that the people that truly know why they're buying it, forgetting price, just know why they're buying it. That's the opportunity that it is. An opportunity doesn't come all that often. I mean, it's great. You're buying it up $3 on Friday and today $2, but take advantage of those days that you might have bought some up 3, up 2, but when it's down $1 or $2.
Interview where Bart says that this is largely the reason Bear Stearns failed, not entirely, but largely because they had the largest short position ever, and silver went from 9 to 21. Bang! The leverage on the up is tremendous. On the down, it can put you out of business.
That's at Zachman60 says, Andy, do you think silver can hit $300 in a year?
I mean, to take a time outlook is very difficult.
I think you could hit it 300 in a year. We just don't have to tell them what year.
Yeah, in a year. But let me do a little math here. If we put gold, most of the analysts out there, what the hell do they know? They keep revising their numbers, but a lot of them are saying $6,000. So by next year, the end of next year, so you take
6,000 in gold.
Yeah. Divide that by 42, which has been the average price range over the last 100 years. You're at $142. It's coming out of the ground at 7 to 1. So you take 6,000 and divide it by 7, you're at 857. In theory, is it possible? Absolutely. There's a lack of trucks and manpower, and now you got an air conditioning. The whole system is screwed up, man. And when you talk about trust, to not take the bigger picture here, forget about what we are led to believe, which we all know is bullshit.
Yeah, CyrusOne was the one that was running the data center. Just Dario, number one, Tim, thank you for sending me this information. I appreciate you for that. Just Dario on X said, fun fact, CyrusOne data center in Illinois, quote, cooling issues impacting the CME aren't currently impacting any other client operations of CyrusOne across any of its data centers, according to Down.
It just happened to hit the market when things were falling apart. There is a rumor out there that, and I think I saw it. I think I saw it from Eric Young, where there was a very large trader or group of traders together that stood for 400 million ounces of delivery. No, I don't want cash, and I'm not going to roll it in February. Give me my metal. Different. When you see the U.S. government call it a critical mineral, that's different. When you see billions upon billions upon billions be delivered every month in the COMEX, that's different. I could keep going on, but it is different. The whole aura of all of this is different, as is the rhetoric coming out of the highest levels. it's different. So yeah, I mean, we're in uncharted
Yeah,
territory.
and I appreciate the credit. Yeah, I went on and said I thought 60 and 70, but I also think at this point, we've seen now silver move almost 20% in a week. And I just don't want people to get uber excited and it should only keep going up. I mean, nothing goes straight up. A pullback
Well, let's talk
and a
about
little
the pullback
breath.
for a minute.
Yeah.
Let's talk about the pullback. And the market wants to only take the people who get it along for the ride.
Yeah.
The pullback that we saw last time, not only was the market oversold, look, the thing is this, is that no one knows what it should really be priced at because it's been suppressed
Correct.
for so long.
The true value is kind of coming out now.
Yeah.
It's when the gloves are off and now the open market is truly finding its footing as to where silver should be priced.
Now, I'm going to give you credit. You said publicly you thought it would be 60 by year end. We may be there by tomorrow. Who knows? Could fall back down too. I'm not saying that it doesn't go straight up, but if you told me that by the end of the year silver would be $100 or 95 to $100, I would believe it. It just seems as though there is a shift in mentality from not only the way that people and institutions are looking at metals. When you see Michael Hartnett from Bank of America and the chief investment officer of Morgan Stanley saying 20 and 25% of your assets should be in gold and silver, that's different. When you see Jeffrey Gundlach, the bond king, saying 25% is not overweight, and when you naked short something over all of the years, the West has been able to do it because no one stood for delivery. As I've often said, less than 1% did. And now the sophisticated money that used to be third world and not sophisticated or wealthy is now wealthy, sophisticated, motivated, and coordinated with other players to where they understand that delivery is the Achilles heel of the system. And we will reach a point, I think, where one of the shorts will break ranks and they'll be like, screw this. It's an existential threat. We are covering. Can you only imagine what the board meetings are like? How many billions have you lost for us already? But it's unrealized. I don't care. If they stand for delivery and you have nothing behind those contracts but rehypothecated paper, watch out. And for those who don't believe this is possible, go back and watch the Chris Marcus Arcadia Economics / Bart Chilton, Chilton, Bart Chilton, Arcadia Economics.
I'll just read you a couple. But Red Dragon 46 says, I worked as an air conditioning technician for data centers here in New York City. These spaces are built with triple and quadruple redundancies. If one AC unit goes down, they have at least two more to cover it while it's down. That goes with cooling towers, pumps, etc. There is no way a, quote, cooling issue can shut down the COMEX. Believe when I say that that's impossible. It's complete BS. They literally showed us how weak they really are. Keep stacking the fiscal to avoid all of it.
Well, it goes to show you how weak our markets are if an air conditioner can bring down the market. And no one trusts us anymore. No one trusts the markets. We talked about the repo market problem a couple of weeks ago, where it's not about liquidity because there's twice the liquidity in the system now than there was in the 2019 repo market crisis, but $125 billion gets injected into the repo market. That's crisis level injection. And it's about trust that the banks who trade with each other overnight.
Don't think of it as, oh my God, is it over? Think of it as, this is an opportunity for me to accumulate more of why you bought it in the first
Rick
place.
Rule always says to me, he says, Andy, I never understand it why you go into a store like Nordstrom's and the shirt you want to buy is on sale. Son of a bitch, it's on sale.
Right. You don't get angry about it then, right? I know, that's the point.
Yeah, but you do, but they do. But it's an emotional deal.
It
And
is.
part of the reason is that the suppression that has been endless has delinked rational thinking and logic and intuitive process. It's delinked it from price discovery. But maybe, just maybe, because of all the things I just said, why it seems different to me. And beware of the guy who says this time it's different. I mean, I get that. It just feels different.
Well, I could tell you no matter whatever happens from now going forward, up, down, or indifferent, it is different.
Don't trust the collateral that is being posted, largely mortgage-backed securities, both commercial and residential. It's about trust, and a system that isn't backed by anything anymore. It's fiat. Trust is paramount.
It's the only thing.
If you lose trust,
You
it's
lose
over.
everything, right?
And so we're beginning to see the world has already got this, or the central banks have gotten it. But now you're seeing it spill over into our markets. And you know who's sitting waiting in the corner, waiting and with a smile is Shanghai. They would love nothing more than to be the price setting.
Of course.
And this happens because look at, the oil contract used to be quoted in London until the NYMEX took it over. And now it's rendered obsolete in London. The point is for us to be as naive and filled with hubris the way we are to think that the COMEX and the LBMA will be
the only ones that can do this job.
Well, you got the nickel market failure.
Right.
Well, but you're talking one of the lightest volume days ever, as everyone is eating turkey dinner and not focusing on the metals market, and so low volume, but yet on the COMEX, all of the other markets were just fine. The Forex and the current, the FX market and the interest rate market, they didn't get disrupted. It's one of the lowest volume days ever, but you have this setup of end of month, end of options expiring. It was right around SLV options expiring, and at the same time, you had all of the traders on the 28th that it was the first day to stand for delivery for the December contract. And then it happens to go off in the middle of the night from like 11 o'clock at night Eastern until 10, 11 in the morning.
It was a 10-hour.
It was damage control.
Yeah, and I'm looking, and I was trying to do some more in-depth research into it, but a couple of things that I saw. We are at all-time highs. We had all-time highs.